Hello, my name is Dr. Chris Heeb, the Debt Doctor, and I welcome you to the Debt Doctor 911 podcast, where each week I, along with my dear friend and financial expert, Richard Schaffer, will shift your focus from living paycheck to paycheck to a more solution-based process that will ultimately revolutionize your overall financial health. We will expose the hidden secrets about our financial system that banks and lenders never tell you about when it comes to getting rid of your debt and building your wealth. So make sure to listen every Thursday as we resuscitate your financial health and keep the lenders from flatlining your financial goals. All here on Debt Doctor 911. Well, hello, everyone. This is Chris Heeb, the Debt Doctor, and I'm here with my good friend, Rich Schaffer. Rich, how are you doing?
I'm doing great today, Chris. How are you?
Awesome. Hey, this is another episode of Debt Doctor 911, and today we're going to talk about a few things I think a lot of you will be interested in because it's going to be focusing on really kind of taking control of your finances and doing the things that you need to do on a consistent basis in order to not only eliminate all of your debt, but also focus on the most important aspect of finances, which is building wealth. But before we get started on our different segments, one of the things I do want to bring to light is, listen, we are on every podcast platform every single week. Every Thursday at 12 Eastern, 11 Central. And we really look forward to your input. So make sure if you have any questions or you have any comments that you let us know. Just simply go to debtdoctor911.com and you'll be able to download all of our previous podcasts and also leave comments and leave questions so that we can take a look at those and have answers for you on the following week. So, Rich, how has your week been?
Well, it's been an interesting week. I'm fortunate I've got my beautiful little girl visiting me from the up north, so we've been spending a good amount of time together. But overall, busy, taking advantage of the summer a little bit like a lot of people, but honestly excited about a lot of things that we're looking to do professionally as well and helping to continue to expand out our podcast audience.
Yeah, that's definitely right. And you know what? I actually took a look at the listenership, and that has been steadily increasing over the past couple of weeks. And our just latest podcast came out just a few days ago, and we actually had a spike in people listening. So again, I encourage all of you to tell your friends and family, coworkers, they need to take a look and download our podcast. You can get that on basically any podcast platform. So today's show, Rich, let's kind of dive right into it because we're going to do kind of a shorter version of our show this week. But some of the things we talked about last week that we were going to bring forth for this show, one in particular had to deal with, your mortgage. Okay. We've been a big advocate of eliminating all of your debt as quickly as possible. And obviously a large majority of people here in the United States obviously have a mortgage. And I know that people think that, hey, paying this mortgage payment every single month has tax benefits when it comes to the interest that you pay on those mortgages. And I've even had financial professionals tell me, why would you ever advise your clients to pay off their mortgage completely or eliminate that mortgage debt as quickly as possible without taking advantage of the tax benefits? And I know, Rich, you are well-versed in that explanation. And I would love for you to tell our listeners exactly why it's advantageous to pay off your mortgage as quickly as possible.
Sure. Yeah. That is definitely one of my soapbox topics. I think a couple of years back, I was doing a training on this very subject. And in fact, it was you that kind of queued up this particular question. And let me begin by saying that, we're not representing ourselves as accountants or CPAs or individuals that specialize in the tax field. However, that being said, when you've been in the industry 30 years, you've worked with a handful of these folks. And here is the basic concept, and I'll get into the deeper parts in a moment, okay? If you have to have a debt, right? In other words, you don't have the ability to satisfy or expire that debt in a given period of time, or it does have tax benefits to it, and it's a low interest rate. Of course, obviously, you're going to take full advantage of that opportunity. I get that, and we wouldn't challenge that. However, you do not create a debt or maintain a debt for the pure benefit of tax deductibility. And this is kind of a big misnomer, right? I hear a lot of people, I have a lot of wealthy friends, and we have this conversation often, like, oh, I wouldn't want to lose my tax benefit. Well, number one, there's limits to that, right? You can only deduct so much, and at certain income levels and certain dollar amount levels and so forth. And that's, quite frankly, between you and I, Chris, the way things are going on a economic, political level, I think it's highly likely that there's a lot of proposals that they would either potentially get rid of that benefit at some point or scale it based on income qualifiers. But that being said, you don't create a debt and, as I said, maintain a debt for the sheer benefit of deductibility, because there's still a real cost. So let's look at it this way. So, Chris, let's say, for an example, that for simplicity's purposes, you gave me $3, okay? And I gave you $1 back. Now, yes, you did receive a benefit, but it cost you $3 to get back one, right? You don't create this opportunity to have an expense just for a limited opportunity to gain a benefit. So one of the big challenges people find a lot is, let's just say, for argument's sake, Chris, somebody's in a 30% tax bracket. I'm trying to make it simple here, okay?
Right, right. I
And
get it.
so you're only getting 1/3 of that. So 2/3 of those dollars are still being spent to satisfy a debt or for debt service when you're only receiving less than 1/3 benefit return. It makes no sense, but you hear this happen a lot. I think it's the go-to answer. Somebody goes, well, I wouldn't want to lose my tax benefit. Well, if you didn't have to spend all $3 and you only had to spend one, you'd still be $2 ahead, right? It's not a complicated concept, but it is amazing how often we hear that, Chris.
Yeah, what's interesting too with financial advisors, I hear that, again, accelerating the payoff of the debt is going to take additional monies away from the potential investment opportunities. And I find that kind of, I don't say alarming, but I find it kind of comical, in that, accelerating the payoff of a debt, what does it actually do? It actually does free up more discretionary income
Absolutely.
that,
They're thinking short term.
right, exactly, that the financial advisor can then utilize with whatever plan they may have to build wealth. So, paying off your mortgage faster is actually going to free up more monies to use for whatever you want to do.
Hmm.
Right. So
Yeah, absolutely.
again,
Absolutely. And having been an advisor and a planner for many, many years, Chris, over a decade, I understand that mindset, right? But that's very, very short-term thinking, because I'm looking at that I can direct $2 or $3 of every dollar they're earning or whatever the case may be. I'm losing sight of the fact that long-term college planning, retirement planning, things that is going to require real dollars. The quicker I can expire those debts, the more dollars I can drive towards those objectives. So it's really a matter of rescaling their perspective and looking longer term, both from the consumer standpoint, but also from the professional standpoint.
so the bottom line is, Rich, I think we would both agree is, before you think that, paying off your mortgage traditionally over a 30-year period, okay, which most people have 30-year mortgages, might not be the best thing. And I think I just from what we've spoken about or talked about today, I think it would behoove our listeners to maybe reconsider, is there a better way to accelerate the payoff of my mortgage and not worry about this so-called tax benefit? Which leads us into our next topic of discussion, which is, some people will then tell me, well, I make biweekly payments, okay, towards my mortgage. So comment on that in regards to, just kind of throwing, money, or making that extra mortgage payment every year.
Hmm.
Is that really doing much of anything?
Okay, so we'll begin by saying the obvious, that anytime you direct any additional dollars towards a debt, I'm always going to be an advocate for that, right? I always, it's got to start there. It's not magic. At some point, you have to apply more dollars to a debt to get it satisfied sooner. That's pretty obvious. But let me explain what biweekly payments don't do that most people think they do. Okay. So interest accrues on a per diem basis. That means daily. A fraction of that debt is actually calculated or used to calculate a certain amount of interest per day. Okay. So there's 52 weeks in a year. Of course, half of that is 26 and half of that is 13. So simply by setting up a biweekly payment schedule, you're getting one additional payment to principal a year. Certainly not a bad thing, right? It beats a sharp stick in the eye, right? Obviously, it is going to help you pay off that debt sooner. But here's what it does not do that most people think that it does. The days of 14-day amortized loans are gone. There was only a handful of companies that really ever did it wide scale, World Savings, a couple of other companies. But most people think that I'm getting an extra payment a year, but they don't even really think about that. They just think that I'm paying it to my mortgage sooner. What they don't realize is, by definition, these notes, which is what puts you on hook for the money in your loan, basically says that no additional dollars are applied to principal until you've satisfied the entire minimum monthly required payment. So what that means is, if you pay a payment every 2 weeks, the bank is holding two of those dollars for 2 of those weeks, which means they're using your money, just like they do with escrows for insurance and taxes, et cetera. By the way, the money you have in escrow, you get no interest on that, right? They're doing you a favor as they sell it by being able to pay it for you. Now, maybe that's a good budgeting tool for some people, but let's be clear. It's like getting a tax refund. If you're overpaying on taxes, you just let the government use your money all year and pay it back to you, but you're not getting any interest, right?
Exactly.
Same thing as it relates to extra payments. Now, let's say you had a schedule where you paid 1/4 of your payment a week. Same scenario. What if you paid 1/30th of your mortgage payment every day? Well, guess what? They still would not apply any of that additional money until the 30th day, when you'd satisfied the entire minimum monthly required payment. So that is a big part of the misnomer, Chris. Somehow people think that maybe they wouldn't even be able to articulate that they're creating an extra payment a year, but they think, oh, I'm paying it to it sooner. So that is really not true. So it's all a matter of getting out of loanership of your money and getting into ownership of your money, leveraging the use of your money in the most efficient, systematic way possible to your advantage, instead of the financial institution's advantage. Does that make sense?
Absolutely makes sense. And that then leads us into the next segment of what we're going to talk about, is the importance of having your own financial GPS tool. Okay. And you and I have had these conversations in the past where, technology in general, okay, whether you look at any aspect of living your life, okay, technology has finally advanced into the financial services industry. And now we actually have a unique GPS financial tool that can do all this work for you. Okay. A lot of people that I speak to, and we'll talk more about this in our final segment of today's podcast. And it's going to segue into, what the young generation's thought processes are versus, say, the old generations, such as ourselves, Richard, and I am dating you, sorry, but I fall into that older generation. If in fact, like, for example, we would have had this tool now that we have 20, 30 years ago, I probably would not be having this conversation with you on this podcast. I'd be somewhere on a beautiful golf course with a caddy and having a cocktail afterwards. But my point is that the significance of technology finally catching up with the financial industry, where now we have a tool that acts like a GPS, is something of significance, right?
Absolutely. In fact, it's funny. I did a program maybe 3-4 years ago, perhaps, and I talked about the evolution of technology. Now, even if we're somewhat older, i.e., we're not millennials, right? I want a lot of people in the audience to understand we're not necessarily talking about old, young versus an age standpoint, but it's more so our way of thinking, right? Our methodology, right? And of course, we've all been younger, so we think when we're younger we have it all figured out, and everybody older is stupid, right? But we're talking more about being able to capitalize on ways in which things are able to help you uh, do things more efficiently, whether it's life or business. Okay, so let's look back and think about why what you just said is so incredibly important. I don't care how bright you are, how educated, how disciplined you are. You're not a machine. You can't work 24 hours a day. It is impossible, right? You've got to sleep, you've got life, you've got kids, you've got a job. The average person is not sitting in front of their computer using an abacus or an Excel spreadsheet or a Texas Instruments BA financial calculator and doing complex real-time calculations on their finances and their budget every day. They're not. It's just not. We use the example weight loss a lot. Well, how hard is that concept, Chris? You're a doctor. Eat less, exercise more. Boom, problem solved. Well, why is 2/3 of the population overweight and 31% of the population obese, right? Has little to do with not understanding the basics. So let's look back at when it comes to understanding navigation. We use the example a lot. You just alluded to it, Chris, about GPS, right? Well, there was a time way before even your time, Chris, that people don't use a sundial for direction, right? All they had to do is say, hey, there's a sundial.
Hey,
And I
take
think
it
this
easy
is
there, Rich. I'm not that old.
and I think this is north, right? Okay. And then we started developing a compass, right? Every car my grandfather had growing up, he had a compass, that little sticky compass that sat on the front of his dash, right? That gives you direction. Hey, it's a little better. I know east, west, north, south, right? Then they came out with maps. They were crude once upon a time, like almost like the old treasure map concept, right? And then they had something called Tom's Guide. Not sure if you ever remember that, but it was a little bit more of a detailed sort of locationary thing as far as maps go.
I remember the triptychs when you could get from
Yes.
AAA.
Yes, triptychs, and that would you're going on a trip. That was pretty beautiful. My parents used to use that, and then MapQuest. Now, MapQuest was something you and I kind of used, where it was a application. Well, it wasn't an app. It was just a web-based kind of tool. You could print out directions, but it was always crappy because you didn't know if when it said turn right, is it right out of my driveway? Is it right at the end of the street? Right, and if you got lost, you didn't really have readily available access to a computer and a printer to give you new directions. You were just kind of screwed, right?
Right.
Then we came out with GPS. Now, why is GPS superior to all of those? Because in real time, it recalculates your current position. And now you've got Waze and all these other things that take into account traffic flow and if there's a cop on the side of the road that you might have to slow down for. There's a lot of real-time information. Now, here's the important factor, and it alludes to what you just said. Where is that for our finances? What has been developed to actually modernize the way in which we can efficiently look at our money and in real time, Chris, be able to immediately recalculate the long-term consequences or impact of every single financial decision you make in real time? Just like GPS, you missed that turn at 200 feet. Recalculate. What if there was a way in which you could create a web-based financial solution that literally could work just like GPS for money? It literally could tell you to the penny, to the day, exactly which debt to pay off, how much and when, and leverage every dollar you have, every day you have it until you spend it. And most importantly, allow you to understand the long-term impact or implications of every single financial decision you make today in real time. That's powerful, and that's really modernizing the use of finances. And this is going to be the way in which people manage their money in the future. There's absolutely no question about it.
Absolutely. That's the great difference between a dynamic tool and a static tool.
Absolutely.
Hey, real quickly on this segment, did you actually say Texas Instruments?
Yeah, that was my very first financial calculator. My Texas Instruments BA financial calculator was the one I used for all my mortgage business 25 years ago.
That's awesome. Hey, listen, everyone, we'll be right back. We got to make sure this show's paid for, so stay tuned. These days, American consumers are struggling just to keep pace with rising prices for basic staples. Are you stressed that you live paycheck to paycheck? Are you frustrated that you cannot seem to get ahead, always backing yourself into a financial corner? Are you hopeless that your financial predicament will never improve and you are just going to have to live with it forever? Recognizing that you need to do something about your debts is an important first step on your road to financial independence. Whether your debt problems have become a pressing emergency or you're ready to start that journey to financial freedom, you have a plausible option at your disposal. It's called the Money Max account, a financial tool that will transform your financial life. Denise says this is the best debt reduction system we have ever seen. We reduced our mortgage payoff date from 27.5 years to 8.3 years. Here's how you get started. Write this down. Go to moneymaxnow.com. Schedule your free payoff analysis to find out your exact debt-free date, how much you are going to save, and what wealth you could build for your future. It's free, and there's no obligation whatsoever. That's moneymaxnow.com. moneymaxnow.com. Now is the time to start that journey to completely eliminate your debt and start building your wealth. Go to moneymaxnow.com to schedule your free payoff analysis. That's moneymaxnow.com. Hey everyone, welcome back to Debt Doctor 911 podcast. I am your host, Dr. Chris Heeb, the Debt Doctor, along with my good friend and financial expert, Richard Schaffer. And in our final segment for today's podcast, we're going to talk a little bit about the young and the old concept. This past week, I was fortunate enough to have a conversation with a young, really young gentleman that had just graduated from graduate school, and his profession was the hospital administration profession, and he was actually eventually going to run a hospital, but he had student loan debt. And he had about $50,000 in student loan debt. Not a lot of student loan debt based upon the doctors that I've worked with in the past, where there was upwards of $200,000, $300,000 of student loan debt. But he still had, he had debt. Okay. And debt is debt, no matter how you look at it. And, we had a conversation, and I thought, he came to me and he wanted to know what I could possibly do to help him. So obviously my recommendation to him was, let's run a payoff analysis. Let's take a look exactly what our program, what our tool could do for him. And before we even had a chance to schedule that appointment, he decided that he didn't want to waste my time, that he felt, you know what, I'll just throw money at this student loan debt as I continue to make it. And I should be able to get that debt paid off in no time. My question back to him was, well, define what no time is. I mean, I'd like to know, do you know your exact debt free date? Do you know how much money you could save if you used a unique financial tool to basically take over for you so you don't have to try to think all of this out?
Mm-hmm.
And he had no answer, Rich. He had no answer whatsoever. But nonetheless, he was stubborn. Okay. And call it what you may. Maybe he had a chip on his shoulder, 23 years old. He's out of graduate school. A lot of times, a lot more piss and vinegar, right? Okay. With people in that age bracket. But then again, I have a son, and obviously, you guys, all of you know that I have, two sets of twins, and my first set of twins are out off the payroll and out, in the workforce. And my son, who happens to be just about that same age, is using our program, did have $75,000 in debt. And the past week, he called me and said, Dad, I got a raise. And I went ahead and put that increased income in my program. And guess what, Dad? I'm going to be debt free in one half the time it would take me to do this using the program.
Wow.
Okay. So, I told my son, you know what, son, you have an opportunity to be debt free faster than you ever could imagine. And you have an unbelievable opportunity to build significant wealth. And I'm going to forecast out, Rich. I really told him this. I said, Dylan, I think you could be a millionaire by the time you're 40 years old.
Wow.
Okay. If you just simply, as they say, put your head down, your head down, nose down, butt up, and keep working as hard as you can and doing exactly what you're doing right now, and you will see the fruits of your labor. Now, contrast that with the doctors I work with that are in their 50s, okay, that are absolutely beside themselves because they have hundreds of thousands of dollars in debt and they see no light at the end of the tunnel. And I sit down with them and show them that, look, you're not going to be retiring when you're 65. However, you could continue to work if you like to. But again, let's do an analysis and determine exactly what our tool could do for you. And they look at me and they say, well, gosh darn it, Chris, why didn't you tell me about this 20 or 30 years ago? Okay. So you have this contrast of thought processes. Okay. You have the young saying, well, I don't need this. But then you have the older generation saying, why didn't you tell me this 20, 30 years ago, Rich?
Yeah, I think it's something. It's a story we hear a lot. And my one of my business partners tells me I'm always the coulda, woulda, shoulda guy, right? Because I always want to make all the perfect decisions, and I think we're all like that. But it's. I think what's going to happen as we move forward to this new technology phase is going to be you're either going to be the person that says, "I'm glad I did," or "I wish I had." And I think that's true in a lot of areas. You're a doctor, you know that example in a health standpoint, right? You're either in the hospital getting open heart surgery and saying, you know, I really wish I had had a better diet, right? And I think that we're seeing a lot of things happening in the world right now, and finances are changing so quickly, and we don't have the luxury, unfortunately, of doing a lot of things the way we always did them. Yes, discipline and focus and goals are important, but at the end of the day, we've got to be willing to embrace and I know as we're getting older, we kind of push back against technology sometimes, but it's here to stay. I don't think you're going to stop doing online banking or, not utilize any social media or any web-based applications or platforms. It is the way in which things are being done. But to have something that's simple and easy, that's second nature, is really going to be an area where people are going to look back, much like your son, 5, 10, 20, 30 years from now, like, wow, those little differences. My daughter's 11, as you know, and I talk to her all the time. I'm probably force feeding her information about, I said, you got to save first and spend what's left. You don't spend first and save what's left. And understanding the power of money. I'm always teaching the long-term time value of money and not focusing on immediate gratification, but being able to help allow her to understand that there are ways in which you can allow things to work for you, allow technology to be your friend, not your adversary.
Absolutely, Richard. And on that note, that is going to end our podcast.
We're done already?
We're absolutely, yeah. You know what? We are perfecting this whole concept of podcasts. And listen, next week, everyone, make sure you stay tuned for our next week's show, because two things we're going to talk about. Number one is, hope is not a strategy when it comes to your finances. Okay. And the second thing is, debt free is the new sexy. Rich, did you know that?
I think that's one of the best little coin turns you come up with. I think there's a lot to be until we make it in vogue and make people realize there's really a lot of beautiful thing. It's not about buying things you don't need with money you don't have to impress people you don't know. There's a lot of confidence and swagger that comes from actually having the freedom that comes with being debt free.
Absolutely. Well, listen, everyone, we appreciate you listening to our podcast here at Debt Doctor 911, and we look forward to bringing you valuable information on a weekly basis. Richard, have a great rest of the week, my friend, and we will be in contact for our next podcast next week.
Thank you, Chris.
Thank you so much for listening to Debt Doctor 911. We hope that this episode has helped you transform the way you think, giving you new ideas, and provided you a new perspective on the desire to eliminate all of your debt and build wealth, so you can get out there and create the financial freedom you and your family deserve. If you would like to know your exact payoff date and see what our program could do for you, just go to moneymaxnow.com to schedule your free payoff analysis. That's moneymaxnow.com. Our podcast is for informational purposes only. The purpose of this podcast is to provide you with helpful information on the subjects discussed. Careful attention has been paid to ensure the accuracy of the information, but we cannot assume responsibility for the validity or consequences of its use. As each individual situation is unique, we disclaim responsibility for any adverse effects that may result from the use or application of the information discussed on this podcast. Any use of the information from this podcast is the sole responsibility of the listener. Results will vary based on an individual personal financial situation. All time and interest saving examples on this podcast are strictly hypothetical. Individual time and interest savings amounts are subject to individual qualification. No financial advice or recommendations have been made as a part of this podcast. We encourage you to seek the advice of a financial professional. If you enjoyed this episode, please take a second to rate and review. Each review helps us help more people just like you make a difference in this world. Don't forget to take a screenshot, share it in your Instagram stories, and tag us at The Debt Doctor. That's TheDebtDr, and at FinPro Advisors. That's FinProAdvisors. Finally, always remember, let no debt remain outstanding except the continuing debt to love one another. See you next week.